life, and I'm happy to be doing it. Thank you guys very much for watching and listening. Let's talk about the American Rescue Plan and two things I think is going to affect a lot of my clients. One was going to be the child tax credit. I've been getting questions about it all year long. There's been an expansion of it. It's going to be a larger credit, in some cases up to $1,600 more per qualified dependent, depending on the age. I think it's maxed out at $3,600 for dependents under the age of 6 and over 6 up until the age of 17, which is an additional year they get the credit. Before it was cut off at 16 years of age. That thing is up to $1,000. All right, so Mike, I already filed my taxes, or I haven't filed my taxes yet. How's the child tax credit going to affect me? Well, they're not going to start dispersing the extra credit as of right now until July, supposedly. That's the plan on paper, and you guys know these things have changed. So since you wait to file your income taxes, I'm not quite sure what you're waiting for. If you don't get the credit now, you get the credit later. The credit's going to be fully refundable, a lot like the stimulus credit, and they're going to have an advanced payment plan for that credit in place, much like this COVID-19 stimulus as well. So what does that mean for you? That means if you already filed your taxes in July, the IRS is going to fine you the same way they fine you for your stimulus, most likely, and they're going to start making disbursements of that payment. What they're going to do is they're going to break that thing down in halves. Okay, so they'll give you half over I think a 6-month, 5-month period, and the rest you claim on your taxes. So I guess guys, make sure you keep track of that. Hopefully that they'll come in at some place, at some point, and so you guys, when tax season comes, they'll send you something to use to report you, take to your tax preparer, use TurboTax or whatever your form is, and make sure you keep track of it. And because that's gonna be interesting as well, because I won't be able to track it. I won't know you guys are getting it, so we'll see how that works out. And there is a thing in place that they overpay you guys by accident. If you're under the economic phase out, pardon me, if you currently earn income territory, which is $40,000 for a single tax person, single taxpayer, and I think it's $50,000. Pardon me, yeah, I'm saying single taxpayer, big head household, and I think it's about. Oh goodness, I should know it's about hard. I'll put this in the captions. I think it's $50,000 if you're married or not, right? Married, filing jointly. The whole point I'm trying to make is those guys will be excluded if you get overpaid. When people get in higher income brackets, there could be a expectation of you to repay the payment back. I'm not quite sure what the penalties will be, if any at all. There's still these things they're still working on. Those are good things. Good things to know. There's some phase out for wealthy taxpayers. I normally don't go over this stuff. Wealthy taxpayers don't ask me questions about these credits, but I'll do it since I'm here. The phase out for single taxpayers with child tax credits will be $75,000. Phase out for head of household returns will be $112,000 plus 112 plus 5, 112.5K. And for joint returns, it's going to be $150,000 for this new credit, for the expanded credit. Now for the old credit, those phase outs for single taxpayer, head of household taxpayers with $200,000, and for joint married couples, for joint couples, married filing jointly couples, pardon me, they were $400,000. Those stay in place, but for a smaller credit by, in some cases, it's more than $2,000 credit, not the $3,036 credit. If that makes any sense. And like I said before, the disbursement method is supposed to be a series of payments starting in July. We'll see how that goes. All right. Keep in mind, they're still dealing with stimulus. They're still dealing with IRS. They're still dealing with processing tax returns for this year. In some cases, last year. I've had several clients who were paid last year especially on amended returns. So hopefully they'll get it figured out in time to keep the ball moving as smoothly as possible. All right. So and what you don't get, those advance payments over the summer and the fall, that will be something you can claim in your taxes next year. If I didn't make that clear, if I didn't clarify that. Let's talk about unemployment. Specifically, what's going to really affect a lot of you guys is going to be the forgiveness of unemployment taxes, retroactively going back to 2020, which was last year, for unemployment under 10K, 10.5K, pardon me. Well, let's say around 10K. So with that being said, what this means to you guys is that unemployment benefit that you've been taxed on, especially if you earn the tax year and wondering where you're going to be taxed on, you better go back in and file an amendment and get some of that money back. I do not know the official instructions yet on how that's going to work. All right, we're still waiting on them. A lot of these things are relatively new, So I'm trying to keep you posted on as best as I can, but I don't have the clear-cut instructions yet on how to process it in the software, or to instruct you how to process it on another software if you're not working with my company. But I will try to do the best I can. So they're telling us to hold up on the amendments right now. We already had questions about it. Well, and that's fine and dandy with me. We're still kind of smack dab in the middle of tax season, which I expect to be a later tax season because we had a later start. And then this was a lot of taxpayers wanting to see if that child tax credit would give them a bigger refund check, which makes perfectly good sense. And I'll tell you one thing I noticed too: the stimulus, the way it came, it came when people needed it. So it's not just about my industry, but I will say, the way that stimulus came, it almost took the place of our refund advance loans, and a lot of early filers coming in early because the money they got coming in early, or the money they borrowed, they did not have the need to borrow it because they had a stimulus check in their bank accounts. So for that, with that being said, this is super important. I can't say this enough. If you are a client of my company, I really greatly appreciate you, and we're not perfect. So if you send us an address or you send us direct deposit information for the file, so your return can be directly deposited in your account, it's going to be extraordinarily important to make sure you double check anything before you sign it, especially those two lines right there. What happened to your job on the calculations? What happened to your job making sure your information for your financials go in the right place? For your income, for your income that you generated last year, your W-2s, your 1099s. For some of you guys with investments, your dividends, your capital gains, we will report those. We report those correctly, but we want you to double check that direct deposit and that address information. That's something that we actually look at twice more than anything else, because there's so many awesome programs coming out to help people, and so many of them are contingent on them being able to find you that address to your banking account. And if you don't have those in place, then you can probably miss out on finding delays and some extra benefits that a lot of families are really needing. With that being said, this is Mike. Thank you very much for your time. Please share this video with a family member or friends. That's greatly appreciated. If you got any text questions, drop a comment below or text me at 713-340-7963. Hey, I pay $100 for all income tax referrals. Somehow we're up to $200, depending on the price of the return. Have a great night. Enjoy your Saturday. I'll be here having the time of my life working on tax returns. Thank you and good night.